My job really is to give you a very quick overview to set the context for the first panel today, and address this point around how can Europe's digital technology transform our financial services market. And to do that, I'll start off by drawing on two key themes in Deloitte's Global Banking Outlook for 2018, customer centricity and technology management. We all know that FS firms are forced to move away from their sales and product-obsessed view to a much more customer-centric model. And by that, I don't mean you understand your customer better, but your sales and products are designed with the changing needs of customers on a real-time basis. And a striking example of that is a startup that I met recently called Cover, which is an insurance provider. And essentially, you can order insurance, car insurance, by the hour. And 5 minutes before it's going to run out, it'll ask you whether you want to renew for another 15 minutes. So that's the real-time thinking through what your customer wants, being able to respond with your product, one click, one finger, which is their startup mantra of sorts. And it's moving to that equilibrium, which is really hard for an incumbent to do, as we all know, and equally for the regulator, and indeed even for the other players in the ecosystem, such as consultants. So we're all playing this game of catch-up. And key and fundamental to that is, as you know, analytics. So the ability to foresee what that customer need is going to be, and then is the agility, the ability to then respond to that customer need pretty much real time. So that's the challenge of customer centricity. And the second piece, which sits alongside that, of course, is technology management. So how do you become more agile and how do you become more analytical, almost at a real-time basis? And for that, you then have to leverage some of the new technologies that are out there. And how does regulation then play into that whole equilibrium? To a certain extent, GDPR was almost ahead of its time. So by the time FS firms started seriously thinking about profiling customers and understanding their needs to a greater extent, GDPR was present. And it kind of helped with the whole regulation by design concept. So let's think about regulation when we start coding the technology. Let's think about regulation when we start designing the product. So that's one piece of regulation that we know is at play. At the opposite end of the spectrum, to deliver that analytical ability and agility, vast amounts of data need to be crunched in the cloud. So cloud computing is a technology that's clearly been embraced. And you couple that with the return on equity that banks currently face, which is something like 7%, against their cost of equity, which is approximately 9 to 10%. And the big players now face an operating cost of around 63%. The need to move to the cloud has never been so persuasive as now, given all these pressures. So the need to respond to the customer, as well as the cost pressures of just running that technology and driving down those operating costs. And thinking about then how regulation plays into this, perhaps one could argue that in that field of regulating large players like the Amazons, like the IBMs, who hold vast amounts of FS data, we're slightly behind the game relative to, say, something like GDPR. And then we visit the middle of the spectrum, where you have, for example, something like AI. And when you look at AI, of course, currently we have many applications that are live. So a lot of retail banks or insurers use chatbots. We already have financial apps that help customers to manage their income. So we have some AI tools already. But clearly, firms are looking at deploying AI in a more intensive way, not just for the customer experience, but through to control functions, through to the third line of defense and internal audit. And all that then again raises the question of ethical boundaries, and regulation is clearly looking at addressing some of that, but we currently don't have anything in play to think about regulation by design in some of these solutions. So clearly we have regulation at different points in this journey to customer centricity and technology management for firms. These examples also show how hard it is to kind of call the timing of regulation. So 18 months ago, everyone was talking about blockchain. And there was real pressure for regulators to come out and say something about the governance around blockchain as much as they maintain their technology neutral position. So many regulators trial blockchain solutions themselves. But it would have been premature to regulate blockchain, given we just don't know where the use cases will land. So the timing of regulation is a critical challenge, and it's something that is really hard to work through in the fast-paced landscape. But the story is kind of incomplete if we just talk about incumbents trying to evolve and the regulators. I think there are two other key forces that are transforming financial services now. One is a changes in market structure, and the other is a change in market demand. What do I mean by that? So in terms of market structures, I won't talk about the Googles and the Amazons because their foray into financial services is pretty well documented. But I do want to talk about a challenger bank that's caught my eye recently. It's called Starling Bank. So when they first launched in the UK, and a number of the key players were ex-Royal Bank of Scotland employees, their go-to-market solution was, we are a marketplace, a banking marketplace, a regular bank with a regulated banking license, but it was a marketplace model. So they could sell an insurance product by a third-party regulated insurer through their marketplace platform. Disrupted the whole UK market like never before. So in the past, you had a retail bank who was a manufacturer and a distributor. Starling Bank came in and said, hang on a minute, we can be the distributor. And so suddenly the role of insurance brokers came into question, the role of all the other smaller banks which could offer products through this channel was brought into question. But interestingly and more recently, they've come out and said, we are now going to become a banking as a service provider. Hugely interesting and fascinating change. So what do they mean by that? So they want to be the Amazons or the IBMs that are offering the infrastructure. So they want to provide their banking license to you or me to develop our own product and sell through their banking license. So they will do what they're good at, which is let's manage the regulatory capital, let's manage the governance. But now not only are they a marketplace, but they are banking as a service provider. So again, huge disruption in terms of market structure and how that could change how banks currently operate. A very new concept, though. They're just rolling it out, so we'll see how that change lands. But that's about market structures. And then I want to come to market demand. So I was recently at a UK finance conference, which is the banking trade association in the UK. And one of the banks on the panel, it's an app-only digital bank, said, market demand is changing. Today we have millennials who want to share their mortgage and collectively buy a property. We're not set up to do that. We can't credit risk a group of parties against the same exposure against one piece of collateral. They want to do it, but they just can't, because even for the challengers, even for the startups, they're all starting with the old model to a certain extent. They're going to work pretty hard at it to solve it. But market demand is changing as well. So between these points around customer centricity, the pressures to use new technology, changes in market structures and market demand, stand many opportunities and risks for the European financial services ecosystem. And they all present opportunities for all of us, but the timing is a critical issue as to how we respond and how we skill up and transition to this new world.